Okay, so the 2022 Toronto real estate market was nothing short of crazy and stressful, right? We had Bank of Canada increase interest rates so drastically. Every headline we read was so doom and gloom and dramatic. Prices are falling, sales are falling, and it really felt chaotic. I'm hoping in 2023 we're all just able to take a breath and it's not the repeat of last year. Monday, my name is Vik. I'm a realtor here in Toronto, the GTA, and I help people buy and sell real estate. Really quickly, I want to thank everyone for the support I've gotten. It really does mean a lot, and I'm excited to bring you so many more great videos. I know everyone on YouTube sort of just says the same thing, but being on this side now, I understand why it's important to say thank you, and subscribing, liking, sharing, all that stuff really does help. Leave your comments down below as well. I'd love to hear what you guys think of the market and where you might think it's heading. If you have any questions during the video, you can click the first link in the description and we can hop on a call and I can help answer any of those questions you may have. Let's get into the video. So we're gonna be talking about the 2023 Toronto real estate outlook, but before we get into my predictions for 2023, I wanna do a quick recap and just show you what happened in 2022, set the context, and show you how we got here. I have a couple of charts and numbers, and one in particular for December that I want to go through. Let's jump on the computer real quick, and I'll show you what it means. Okay, so I have three charts I want to show you, and with their pricing in 2022. So we have our detached, we have our semi-detached, and we have our condos. I have average pricing in Toronto and average pricing outside of Toronto, which is going to be considered as 905s, and as well as median pricing in Toronto. Now, the median pricing is actually going to be really important to watch, as well as because it takes out any outliers and gives us a better picture of what's going on. I'm not going to spend too much time going into all the numbers. I just want to do a quick recap. So you can pause the video and just take a quick look at them, or message me if you want more information. So now let's start with our detached prices. We see that average prices peaked both in Toronto and in 905s in February, but sales didn't peak until March. And in March was when we also got our first interest rate hike. Median pricing also peaked in Toronto in February. From the peak to the end of year in December, we are down about an average of $400,000. With the aggressive rate hikes, it makes sense. You can also see sales declining month over month, as well as more rate hikes were announced. The demand just kept falling off. So let's move on to semi-detached. We had market peak here in March for both Toronto and 905s. Sales also peaked in March, and from the peak, we are down about an average of $200,000 in pricing in Toronto, but the median gives us a better picture, and for that, it shows we are actually down $400,000, and it takes out the outliers. And what's interesting to see is that average price for a semi-detached in the 905s is actually more than Toronto, but the drop from the peak was also more. So for the peak from average pricing for semis outside of 905, we're down $700,000. All right, so now let's get into condos. This is where it gets a little bit interesting. So we have market peak in Toronto and the 905s in March, and the highest price and sales price. So median pricing was also peaked in that time. Now we're down about 100,000 from peak to the end of the year. And I have a chart at the bottom here that I want to show you as well. And this chart is how we ended the year off in December, right? So it's a year-over-year comparison for December. Now, what's interesting to see here is that every other asset class was in negative year-over-year, but condos were actually up 1.4% in average pricing. Nothing to brag about, but it's still kind of nice to see. The reason we're also seeing condos hold up a little bit better in price is because when you're priced out of the freehold market, either because of pricing or rates or both for a lot of people, you're gonna move into the next asset class that you're gonna be able to afford, which is usually condos, right? You might have also heard a number going around where people were saying we're up year over year on prices about 9%, but this really only happened because of the strong market at the beginning of the year, which I would consider as an outlier. You would more likely to pay attention to year over year per month to get a better understanding, or even month over month pricing. So now let's get into 2023 and discuss what we might be seeing happening with the market. I'm going to talk about three things: sales and pricing, interest rates, and the pre-construction market. So let's start with interest rates. I don't think the Bank of Canada is going to be easing up on rates anytime soon. And unfortunately, I don't see a reason why they would have to cut rates or even stop raising rates right now. Employment numbers were pretty strong. We're not seeing a huge rise in defaults just yet, and everyone was stress tested. Yes, the over-leveraged investor or the one-off homeowners, they're definitely selling, and we're seeing that in the market right now. But overall, not a lot of people are in default right now. And before those people have to sell their house, they'll cut spending in other areas. For example, I'm also on a variable mortgage right now, but I'm budgeting very differently versus when I was for 2 years ago. The rest of the areas also may not be in a recession right now, but I definitely think housing is in a recession. We're seeing price drops, sale drops, demand is being so low. Overall, the employment numbers are pretty solid, but inflation is still high. Yes, inflation has still peaked, but it's still high, and TIF is not a fan of that. So on Wednesday the 25th, they have another announcement coming up, and I expect another rate hike and possibly one in March as well. But let's see what happens. I'm hoping they ease up a bit. And if I was to say when they were going to cut rates, probably Q4 of this year or Q1 of 2024. So let's talk about sales and pricing. There's probably going to be a lot of news that comes out for the first 6 months that's going to be talking about pricing and sales year over year. And the headlines are not going to be great, but you need to be looking more at the month over month numbers when you're making a decision for yourself. We know the first 4 months of 2022 were crazy, so it shouldn't be a surprise to anyone that the numbers are going to be lower, but the media is going to spin it and they're going to say it's the end of the world. In 2022, we also saw 75,000 total sales, which was down from 2021, which had 121,000 sales. I don't think we're going to see those 2021 sales numbers again for a while. And depending on the Bank of Canada outlook for 2023, we could see less sales compared to last year, but I don't think it's going to be a drastic drop. And as for pricing, it's probably going to be grinding down a little bit further, but not like the drops that we saw in 2022. As more people get accustomed to the rates and banks' policies, we just accept the pricing, right? And sellers are also kind of hanging on to their inventory because they don't want to sell it at loss. Buyers and sellers are both kind of playing a waiting game to see what's best for them. If you bought for the long term, like I've always recommended, then it doesn't really matter what the rates are right now, unless you're struggling to make the payments and you can't get a renewal for your mortgage. Long term, I'm definitely bullish on the housing market. The immigration numbers we're seeing every year, we're just not going to be making enough units to keep up with the demand. And this brings me to my last point, which is going to be on the pre-construction market. Now, I actually started my career back in 2018 in pre-construction. The only thing that's changed from 2018 to now is pricing. I've seen tons and tons of launches, first day incentives, and first day pricing. One thing I can tell you that if you're anticipating any drops in that market, it's simply not going to happen. We still need to build more units to keep up with demand, and builders still need to turn a profit. And I'm primarily talking about the pre-construction condo market. We're also going to be seeing fewer launches this year to match the demand for this year because of the slowdown. But this just means overall, we will still not have enough units to match how much we should be building every year. Also getting more expensive for builders to build, and when they have to turn a profit, the expenses are just passed down to the consumer. So this year, we're also supposed to see a record high number of units come to the market. The number is something like 32,000, but realistically, it's probably going to be around 22 to 25,000 because buildings always get delayed. It's still great news because a lot more supply will be coming to the market, and that means renters will get more choices, and you'll see a lot more properties come for sale, which are brand new. Also, if you're closing this year on your pre-construction unit, then that means you probably bought it 4, 5, 6 years ago, and you have enough equity to either sell it or move in, or the more likely case is rent it out. This means that we're not going to see that many people struggling to close on their unit. Now, the opportunity that's available in the pre-construction realm is actually going to be in the assignment sales. So last minute assignment sales can get you either original pricing or less than original pricing. So definitely take advantage of this if you have the cash available. The last point I'm going to make is on the freehold pre-construction market. This is where things get a little dicey. Pre-construction takes less time to typically build, which is around 1 to 2 years to complete. So people who bought last year at the peak and have closings coming up this spring or summer are essentially going to have properties appraised at way lower values. We're already seeing these signs of distress. We saw people protesting the builder. They want to delay the closing, take the deal back or whatever, which unfortunately sucks, but that's just how it goes. If you don't close on the unit, the builder is just going to take you to court and they're going to get their money that way. If you have any questions on assignments or pre-con, let me know. Happy to help. And that's the video for this week. I hope you enjoyed it. Don't forget to subscribe and share this video with your friends. If you have any questions, you can use the first link in the description to book a call with me. As always, have a great Monday, and I'll see you in the next one.